Hello and welcome to another installment of another series that I try to do on this channel, which is weekly reviews. This is the weekly review for the week ending July 24th, 2026. I try to do these on Saturdays. Saturdays are for reviewing the week that was. Sundays are for planning the week to come. So we're going to look at 5 trades, one for each one for each day of the trading week. I took 4 out of the 5 of these trades. Actually, I took 3 out of the 5 of these trades. And then the other 2 are more in hindsight, though I did see Thursday's Dixie dollar long. I did see that just playing out, but I didn't trade the dollar index. So just starting with Monday. Monday is always kind of a day that the market more or less stays in accumulation and, kind of tentatively knocks out some immediate liquidity, draws on liquidity, but not, you don't usually find a lot of conviction on Mondays unless there's a market that has been seriously trending. There probably was like a WTI crude long entry on Monday, but this is the trade that I took. So basically, the market gapped down on the weekly open in the futures, and it kind of like wicked up into the key level of 4,000 even, and then it started to explore tapping into sell side liquidity below. And I had been looking at this candle right here, the low of this hourly candle, as kind of a potential origination candle. And if you count the candles, you get to 10 hours, 10 hourly candles. So in other words, if that's candle number 1, 2, 3, 4, 5, 6, 7, 8, 9, and then 10. Actually, I think that might have been counting this candle as the 10. But anyways, it's it's within my scope of my, I try to go look for 7 to 12 candles to progress in sort of a pause CRT. And so this range from this candle low on the hourly to this swing high just below 4,025, so it's like 4,024 27 or something like that. And there's a pause CRT that occurs because it took only 2 hours to form this little range, but then it takes 8 or 9 candles to, or 7 or 8 candles to take it out. And so I'm on the 5-minute chart here as an entry, and you get a 5-minute model number 1, a classic 5-minute model number 1 actually, because you have this nice fat down close candle below the key level, and then you immediately have a bullish fair value gap, and then price actually retests the high, the order block. I think I was actually in on the wick, just for full kind of like anticipation of this being a good long to take. It's kind of like your classic Monday fill the gap type trade. This is also like this large down close candle here is also an order block. I admit that this is like a little bit sloppy looking right here, and we're actually headed lower in gold. We hit a high of the week on Wednesday, and so the week pretty much formed a bullish, a slightly up closed doji that's it's not super bullish actually on the weekly structure right now. So we might be trading lower to then clear out this pretty inefficient looking low later on. Tuesday was like a really clean, that's like pretty textbook. If you look back through the Romeo 2023 trade review content, that PDF, it's filled with trades just like this. So again, you have a pause CRT of this 2 candle, these are hourly candles in gold again. So you've got a pause CRT that occurs. So you've got this big, you've got a wide range with a fair value gap, up close candle, and then another pretty wide range bar there, up close candle, and then that triggers the pause CRT to occur. So the pause CRT then takes 7 more candles to then, as it accumulates and then finally manipulate below that low there. And I actually had a really great execution on this one as well, just expecting that wick, this hourly candle close here, to then yield a very quick distribution, and that's exactly what it did. You have you don't quite get a 5-minute model number one. This is one of those entries where this is one of those trades where you need a more aggressive entry, just because that down close candle is so large, and we don't get a fair value gap until there, and we actually retest the down close candle. Yeah, it's a little awkward. It's a little awkward. We never really retest it. It takes a while for the 5-minute market structure shift to occur, though I think on the 1 minute, this would probably be a really good one to trade on the 1 minute. So yeah, it was just a lot of conviction that this high would be taken out, and I think I actually got out a little bit before the high actually gets taken out. I kind of got out above the open of that candle there, and price ended up having a further retracement into a kiss of death that I didn't really hang out with, because I was more trading till time. I was more looking just for a really fast distribution before noon, and noon is when the gold fix occurs with the London, the CME, or sorry, it's not the CME, it's the London Bullion, LBME, London Bullion Metal Exchange, but that's when the fix is. So I was basically trading into the noon fix when they're essentially trying to quote unquote bang the close of that day. So anyways, you got the next really good trade. I don't think I got the whole, I don't think I was in the wick of this one, but I was definitely looking for a lower time frame continuation to occur. But this one's really cool. So this is like a 4-hour candle distribution. I've been waiting for this to occur because if you zoom out on this one actually looked like it had potential to be like a multiple day, like a 10-day bullish pause CRT that's being taken out in 3 successive days, or no, it's more like a 15-day. But the later on in the week, the price action, it kind of stalled out and ranged, but you definitely had a really convincing initial move, off of this kind of, this is definitely like a breaker entry, but it's also it's actually more of like an order block. So this isn't quite a swing high, this fat up close candle, but it acts just like a, what I would call a conventional Romeo order block should act. So in other words, you've got a large bullish up close candle, takes out liquidity, like a higher time frame PD array there, and then immediately forms a bearish fair value gap. And this candle is the candle that I'm using as my origination candle, whose high, and this is like kind of the it's not quite a pause CRT, so it doesn't quite fit. It's more symmetrical than anything. Like if you think there's 1, 2, 3, 4 candles down, and then 1, 2, 3, 4 candles back up again, kind of excluding this, what would essentially be like an inducement low candle. You can see some symmetry there. It's more of a symmetrical CRT, but this is this idea of trading violently back into a breaker, or trading violently back into an order block. And so, this CRT in here of this particular 1-hour candle, I'm sure there's an SMT with New Zealand dollar. This is Aussie dollar. But yeah, it gave us a really nice 2-candle distribution short into those lows. And then just continuing on. So if you held for the third candle, because, it's kind of like that 10-to-3 ratio there. If you held for the third candle, then you would have been rewarded for further distribution down into this new week opening gap. But yeah, the new week opening gap really did a good job like stalling further Aussie price, stalling the further distribution. So we're just more in accumulation mode still. And then, so here's a Thursday Asia session. So that was Wednesday Asia session. So in other words, that was your entry would be like the, mid 11 p.m. on the 23rd. But this is Thursday. So this is, actually, I'm sorry. This is like the same day, isn't it? I apologize. Yeah, anyways, it's worth studying. But yeah, this is more or less the same impulse we were just looking at, but just flipped because this is the Dixie. I didn't actually trade this, but I saw it. I mean, it's a really kind of cool, again on the 4-hour candle. So you have 11 candles, which is really pushing it as far as the number of candles that I try to look for. But it's a nice pause CRT of that 8-hour range there. A nice pause CRT there. Taking 9 candles or so to get down to the lows again, and then it turtle soups that low of that 4-hour candle like perfectly, and then it just rips higher. So like if all you're doing is like holding your candle to time, then you get rewarded with like an insane distribution leg off of that one. I marked there's higher time frame liquidity there, and then there's even more higher time frame liquidity above price, as you can imagine. And then this one's a little bit of a esoteric pair that I don't think too many people look at, but I try to gauge higher time frame reversals in Bitcoin, not by looking at the way that Bitcoin might be priced in stablecoin or Tether, or Bitcoin might be priced in dollars. I actually look at Bitcoin as it's priced in gold. I find that to be helpful. And so if I see some conviction, if I see like essentially like a true market structure shift occur in gold, which that's what this was. So on the this is a 1-hour chart, and so you have a 1-hour true market structure shift that occurs right there. So in other words, that swing low right there, that's a pretty prominent swing low because there's the weekly open, and then we have a swing low. And so it essentially clears below and closes below the low of the week. So like, increase your time frames a little bit. I mean, that's probably a 4-hour true market structure shift as well. So like a really definitive shift. And then immediately as far as you get that down close candle, it's like a little breaker, a little algo, turns back on, and we get this really very lackadaisical pause CRT, many candles. So in other words, if you're thinking in terms of like my conventional way of looking at this to try to get this between 7 and 12 candles, then you're looking at probably 6-hour candles or 8-hour candles would do it. And so it takes, if you have 2 8-hour candles to form that down that bearish range right there, it takes 10 I'm sorry, not 10, it takes 6 8-hour candles to finally, or 6 or 7 to finally fully complete the pause CRT of this candle being the origination candle. Why is this the origination candle as far as like the hourly goes? Well, this is the candle that closed below the swing high that broke the low. So this is actually like the initial true market structure shift on the 1-hour. So it's kind of interesting how they overlap. But yeah, you have that nice pause CRT, and the completion of the pause CRT is your entry. The way you would trade this is you'd short Bitcoin on Friday, and then you would, as a hedge, go long gold. As you can see by the ratio, it's like 16 or so Bitcoin for every 1 gold, but the leverage on the futures market messes that up a little bit. So it's more like, I think I did the math one time, but it's more like you've got to control like 8 Bitcoin for every 1 contract of gold because gold, or no, it's like 4. You have to control 4 Bitcoin for every 1 contract of gold, because gold has a much greater kind of like a contract-based leverage ratio built in. So you're able to control like more units of gold, more ounces of gold. Whereas if you just buy 1 Bitcoin contract on the futures market, then that's equivalent of 1 Bitcoin. But gold is different. Like gold, you're not just controlling 1 ounce of gold, you're controlling like is it 1,000 ounces of gold? I don't know. I should know this off the top of my head, but I really don't. Because my trading software just allows me to like size all my positions automatically. I can basically like right click my mouse and just drag on the chart, and it shows me exactly how much a particular position size based on futures contracts would be risking based on certain price moves, based on a certain delta. So yeah, so perfect trade there. If you were, this is another one where we're like, if you take this range, so if you draw a fib tool, price trades exactly into the 50% of the, so in other words, the high of that candle is just below the 50% of this breaker, and then where the wick of the high of this candle that basically was the turtle soup candle was exactly into the 50% range of this little breaker leg there, which is really awesome. And then yeah, we pause, and then we violently manipulate higher into it. We turtle soup it, and then we just dump lower. And if you were to hold for a ratio of, this would actually be a ratio of 33% of that, but it's that 10-to-3 ratio, that 0.3 ratio, then trading time would basically just allow you to have further profits. Obviously, the low there is your final take profit if you're thinking of like a true CRT, but just letting it run, you're able to get even more profit as we kind of trade into that LRLR before the weekly close. So yeah, this is another reason why I'm like bearish on Bitcoin. We only had an SMT with Ethereum. Like Bitcoin never really, I think Bitcoin's high was on Thursday, as opposed to when this ratio actually topped out. But I trust this ratio more than pricing it in dollars. I really do. So yeah, that is the week in review. Thank you so much for listening to my trade. Sorry.